Why putting your money in cash is not a wise decision. The biggest mistakes is thinking that your money will grow when you put it in saving account. It's totally not true. Putting your money in cash can lead to diminishing value over time due to inflation. The return from interest won't cover inflation. It's the same with burning your money when you put your money in saving account. That's why many wealth gurus advise us to put our money in alternative instruments that can potentially yield higher returns. So, let's dive right in. God's money, gold, silver, platinum. Our first alternative to cash is investing in God's money, precious metals such as gold, silver, and platinum. Unlike cash, which can lose value due to inflation caused by the government printing more money, precious metals tend to hold their value over time. Gold, a timeless investment. One precious metal that has stood the test of time is gold. Historical data shows that gold prices have consistently risen over the years, making it a reliable investment option. For instance, in 1950, the price of gold was around $400 per ounce. Fast forward to 2022, and the price had soared to $2,000 per ounce. Looking ahead to 2032, experts predict that gold prices could reach as high as $10,000 per ounce. If you're hesitant to invest in physical gold, an alternative option is to consider gold exchange traded funds, ETFs. Gold ETFs allow you to invest in gold without the need for storage or dealing with physical assets. It's a convenient and accessible way to participate in the gold market. Industrial materials, silver, platinum, cobalt and more. Another avenue to explore is investing in industrial materials such as silver, platinum, and other essential resources. The scarcity of these materials often leads to increased value. For example, silver is widely used in the production of electronic and medical equipment. With advancements in technology and increased demand, the value of silver is expected to rise. Similarly, materials like cobalt, nickel, and silver are in high demand due to their usage in electric vehicle production. Let's take cobalt as an example. In 2012, the price of cobalt stood at $20,000 per metric ton. However, by 2022, the price had skyrocketed to $40,000 per metric ton. This significant increase demonstrates the potential for substantial returns on investments in industrial materials. While precious metals and industrial materials provide alternative investment options, it is not suitable for personal investor to stock up the industrial material, then the investment options goes to investing in mining company stock. However, it's essential to conduct thorough research and understand the market before investing. Another approach is to invest in mutual funds that specifically focus on the mining industry, futures, or options. This way, you can benefit from professional management and gain exposure to a diversified portfolio of mining-related assets. Land and real estate, tangible assets. One of the most solid investment options is land and real estate. Unlike cash, which can lose value over time, tangible properties tend to appreciate in value and provide various income streams. Investing in land and real estate allows you to leverage the inherent value of the property, take advantage of rental income, and benefit from long-term appreciation. If you're a newbie in property investment, subscribe to this channel and check our video about property investment. Investing in property is a must-have investment in every stage of life. However, if you don't have sufficient funds to invest directly in real estate, an alternative option is to consider real estate investment trusts, REITs. REITs are companies that own and manage income-generating real estate properties. By investing in REITs, you can gain exposure to the real estate market without the need for substantial capital or direct property ownership. Safe haven currencies. Another alternative to cash is investing in safe haven currencies. These currencies tend to maintain their value or appreciate during times of economic uncertainty. Let's explore a few examples. Gold is often considered a safe haven asset. It has a long history of retaining its value and is viewed as a hedge against inflation and market volatility. By investing in gold, you can protect your wealth during uncertain times. Another safe haven currency is the Swiss franc, CHF. The CHF is known for its stability and is an alternative currency for trading, especially when the USD faces challenges. Let's take a look at an example of incremental price changes. For instance, in 2010, 1 Swiss franc was equivalent to approximately $1. Fast forward to 2022, and 1 Swiss franc is now worth around $1.20. This demonstrates how investing in safe haven currencies can offer potential incremental gains. Other safe haven currencies to consider include the British pound, GBP, and the Chinese yuan. Additionally, if you don't want to keep too many cash in different currency, you can also explore currency ETFs, exchange traded funds, as a way to invest in a diversified basket of currencies. Mutual funds and stocks. Our final alternative to cash is investing in mutual funds and stocks. Mutual funds provide a low risk, low return investment option suitable for conservative investors looking for stable income. On the other hand, stocks offer higher risk but also the potential for higher returns. When investing in stocks, it's crucial to consider value stocks that have tangible business value and are in acceptable financial condition. These stocks often provide stable dividend returns. If you're more inclined towards growth and willing to take on higher risk, consider investing in growth stocks. These stocks typically belong to innovative industries, such as technology, and have the potential for substantial principal value increments. Regardless of your investment choice, always conduct thorough research, analyze the company's fundamentals, and consider your risk tolerance before making any investment decisions. Government securities and sovereign guarantees. These options offer unique advantages and can be particularly appealing to smaller investors. So, let's get started. Government securities, a secure investment. One investment avenue that provides a high level of security is government securities. These financial instruments are issued by governments to finance their operations and are backed by the sovereign guarantee of the issuing government. When you invest in government securities, you lend money to the government in exchange for interest payments and the return of your principal amount upon maturity. Some common examples of government securities include treasury bills, government bonds, and government notes. These instruments typically have different maturity periods and interest rates, catering to various investment preferences. It's crucial to consider the strength of the government before investing in their securities. You want to ensure that the government has a history of fulfilling its financial obligations to avoid any potential default risks. Unfortunately, there have been instances where governments have defaulted on their payments. For example, in 2001, Argentina faced a severe economic crisis and defaulted on its government bonds, causing significant losses for investors. Therefore, it's essential to thoroughly evaluate a government's financial strength and stability before investing. Investing in government securities for smaller investors. While government securities may seem like investment options reserved for large institutional investors, smaller investors can also participate in these markets through various channels. One way is through government savings bonds or retail bonds, which are specifically designed for individual investors. These bonds often have lower minimum investment requirements, making them accessible to a broader range of investors. Additionally, government securities are commonly available through brokerage firms and financial institutions. These platforms allow investors to access and invest in government securities with ease, even with smaller investment amounts. Sovereign guarantees, added security. Another aspect of investing in government securities is the concept of sovereign guarantees. A sovereign guarantee represents a promise by the government to ensure the repayment of a debt obligation, providing an additional layer of security for investors. When a government issues debt, it is effectively guaranteeing the repayment of the principal and interest to investors. This guarantee is based on the government's ability to generate revenue through taxes and other sources. Sovereign guarantees offer investors reassurance, as the risk of default is significantly reduced. However, it's still important to conduct thorough research and assess the creditworthiness of the issuing government. Government securities and sovereign guarantees provide security and stability, backed by the sovereign guarantee of the issuing government. As a smaller investor, you can participate in these markets through government bonds, retail bonds, or by utilizing brokerage firms and financial institutions. Remember, it's crucial to evaluate the financial strength and stability of the government before investing in their securities, as demonstrated by past instances of defaults. Collectibles. We'll focus on three popular categories: vintage cars, watches, and paintings. Let's dive in. Vintage cars, timeless investments. Vintage cars are not only a source of joy for enthusiasts but also a potential investment avenue. These classic automobiles often appreciate in value over time, making them highly sought after by collectors and investors alike. For example, let's consider the iconic 1962 Ferrari 250 GTO. In 1962, its original price was around $18,000. Fast forward to recent years, and this car has been sold for jaw-dropping prices, reaching a record-breaking $70 million in 2018. Such impressive price appreciation demonstrates the potential for significant returns on vintage car investments. When investing in vintage cars, it's essential to consider factors such as rarity, condition, historical significance, and desirability among collectors. Thorough research, expert opinions, and maintenance are crucial to ensuring the value and integrity of your investment. Watches, timepieces of value. Watches have long been appreciated for their craftsmanship, precision, and aesthetic appeal. But beyond their functionality, certain watches hold substantial investment value. One notable example is the Rolex Daytona. In 1963, this watch had a retail price of around $200. Today, vintage models can sell for hundreds of thousands or even millions of dollars at auction. The limited availability, exclusivity, and brand reputation contribute to their investment allure. When investing in watches, consider factors like brand reputation, limited editions, historical significance, condition, and authenticity. It's advisable to consult with experts or experienced collectors to navigate this complex market successfully. Paintings, investing in art. Art has long been recognized as an investment asset that combines aesthetic pleasure with the potential for financial gain. Paintings, in particular, have proven to be valuable collectibles over time. Let's take a renowned artist like Vincent van Gogh as an example. His masterpiece, Portrait of Dr. Gachet, was sold in 1990 for a staggering $82.5 million. However, in 2019, a painting from the same series, Laborer Dans un Champ, fetched a record-breaking price of $111 million. Such examples highlight the potential for significant returns on art investments. When investing in paintings, factors such as the artist's reputation, historical significance, provenance, condition, and market demand all play crucial roles. Engaging with art experts, galleries, and auction houses can provide valuable insights and guidance. Then, why it seems that collectibles is not an usual investment. Yes, you're true, it needs high capital, so only the riches invest in collectibles. Now, you might be wondering how small investors can participate in the exciting world of collectibles. While some high-profile collectors and investors make headlines with multi-million-dollar acquisitions, there are still opportunities for those with smaller budgets. Let's explore a few ways to diversify your portfolio. 1. Fractional ownership platforms. One option is to leverage fractional ownership platforms that allow investors to own a fraction or share of a high-value collectible. 1. These platforms divide the ownership into smaller portions, making it more accessible for individual investors. With fractional ownership, you can pool your resources with other investors to collectively own a valuable piece. This method grants you exposure to the potential appreciation of the collectible without having to shoulder the entire cost. 1. Collectible funds and exchange-traded funds, ETFs. Another avenue for small investors is to explore collectible funds or exchange-traded funds, ETFs, that focus on specific collectible categories, such as art, cars, or watches. 1. These funds are managed by professionals who curate a diversified portfolio of collectibles, allowing investors to participate with smaller capital contributions. By investing in these funds, you gain access to a broader range of collectibles and benefit from the expertise of the fund managers. It's important to research the performance history and management approach of the fund before making any investment decisions. Limited edition and affordable collectibles. As a small investor, you can also focus on limited edition or affordable collectibles. These may include limited production art prints, collectible coins, stamps, or even vintage toys. While the value appreciation might be more modest compared to high-end collectibles, there can still be opportunities for growth and enjoyment. Look for collectibles that have a dedicated fan base, historical significance, or an element of scarcity. These factors can contribute to potential future demand and price appreciation. Engaging with online marketplaces and auctions. The internet has revolutionized the collectibles market, opening up opportunities for small investors to participate. Online marketplaces and auction platforms provide a vast range of collectibles at various price points. By engaging with reputable online platforms, you can explore collectibles, compare prices, and participate in auctions from the comfort of your own home. However, it's essential to conduct due diligence on sellers, verify the authenticity of items, and be mindful of fees and commissions associated with online transactions. Remember, as a small investor, it's important to set a budget and stick to it. Collectibles can be enticing, but responsible investing involves diversifying your portfolio and not overextending your resources. We're finished. Those are options for making your money works for you while sleeping. Choose the ones that's suitable for you and diversify your investment. It's always good to put your eggs in different baskets. Thank you for joining us today. We hope this information inspires you to explore new investment opportunities to fight inflation. Don't forget to subscribe to our channel for more insights into the world of finance and investment. Happy investing!